Hello and welcome to Bishop Fleming's second restructuring series. Jack Callow here, Luke Venner.
Morning.
Good morning, how are you today?
I'm well, yourself?
Fantastic, yep, very well, thank you.
Good.
Today we're talking about debt restructuring. So let's paint a scenario. We've got a business, we know that funding's commonplace, overdrafts, loans, etc. But what about if that funding is no longer working for us? What do we mean by restructuring debt and specifically in circumstances of businesses in trouble?
Okay, so we've got let's say we've got a business, a viable business, but perhaps it's carrying a lot of debt, and debt possibly that's expensive to sort of service. And this, it's a really frustrating scenario, isn't it? Because you've got a good business, but all of the profit and all the sort of free cash flow is just disappearing in debt repayments. So restructuring debt is all about, a bit like if you're restructuring a mortgage, it's about coming up with a package which is better suited to the business and ideally is going to be cheaper in the form of interest rate. So it's going to save the business money. The business can then use that additional cash flow on things like, investments and working capital, all that sort of stuff, on things that will ultimately improve the business.
Okay. I think, when we're looking at whether it's restructuring debt or gaining access to more funds, we're looking at a business and, the important phrase is the right funding for the business.
Mm-hmm.
So presumably it's not all just about chasing rates. It's identifying the right product.
Yeah, exactly. It's about having a lending, a package that suits the business. So, for example, if you're a company that's issuing lots of invoices, you want to fund your debtor ledger, then something like invoice finance might be good for you. It might be that a more straightforward loan or an overdraft or a revolving credit facility, for example, is more straightforward and better for the business. So it's about coming up with a package in the round which works for the business. It's not. We all want to save money.
Yeah.
I mean, obviously that's granted, but it's about coming up with a package that works for the company.
Okay. So we've got restructuring of debt.
Yeah.
We've got things like interest rate, costs, products.
Yeah.
What about a scenario where the business needs further funding? It's not just about dealing with cost savings on the current level of debt in the business, but actually we need more to get through the challenge that's presented.
Mm-hmm. So the situation that we come across most regularly is a company that, again, we get under the skin of it. It's a viable business, but it's got a cash flow problem, and sometimes it's just a short-term cash flow problem. So coming back to our other video around creditor pressure, you might need to borrow some money to keep HMRC on board or deal with a particular supply, for example. So we can, if we're not looking at a restructuring scenario, we can actually help businesses raise debt. And again, there are all sorts of different packages out there that we can look at, particularly through our relationship with Capitalise, which actually allows us to easily and quickly go out to the market and talk to over 100 lenders. So it's all about can we raise money to help the business, normally in the short term. And the same thing applies as to restructuring debt. It's about coming up with a package, if you like, and a pitch that we can sell to the bank. Here's the business plan. Here's the forecast. Here's how the business is going to afford to repay the debt. It's about coming up with that package to give your business and you credibility when you're talking to a bank.
So you've mentioned our relationship there with Capitalise,
Mm-hmm.
and how we can put a business in front of a number of funding options through an application process. But you also mentioned how it's similar to restructuring your mortgage, for example.
Mm-hmm.
What other value does a professional advisor sort of add in this scenario of I want to restructure my debt, I want to look at finance options?
So the additional value is around helping you understand where your business is currently at, because you might have got statutory accounts, but they will only paint a picture of this is where the business was 6 months previous, for example. It's about helping you to understand where your company is now and where it's going to go going forward, and that's what the business plan can help you with and what the forecast can help you with. And that is a director of a limited company, that is a really important management tool. Mm-hmm. So it's that added thing that we can bring. Or indeed any accountant or advisor can bring to a situation.
And those forecasts you mentioned, I mean, obviously I need some money, so I'm going to make things look potentially like everything, every possible good outcome is going to come to the floor. I mean, you know, there's obviously an option there to, an opportunity there to have that scrutinised and you know, the assumptions tested as a challenge.
Exactly, yeah. I mean, the banks aren't silly, and it will depend on how much you're borrowing, naturally, because if you're borrowing 100 grand, for example, it will probably go through some computers, and you'll get a more straightforward answer. But if you want £10 million to, you know, grow your business or whatever, you're going to have to come up with a package which, as I've said, you know, on many occasions gives you credibility. But the bank will be scrutinising your cash flows, and if you've got that professional input, then it can just help to support whatever you're trying to, you know, ultimately sell to the bank.
Fantastic. So, slightly more complicated, slightly more involved in restructuring your mortgage on your private residence. If debt in your business is causing you a problem, or accessing further funding could potentially be a solution to a problem, it's always worth, you know, considering where professional advice can help in that scenario. That draws us to a close. Thank you so much for your insight.
Thank you very much. Thank you.
Luke's been Luke. I've been Jack. Thank you for watching. Until next time.